Making your way in the world today takes everything you've got.
Okay, I just turned the recorder on, so I need to say good evening again to everybody. Welcome to the Hit and Run Candlesticks Tuesday night member e-learning. Seriously though, really, you might make more. You actually might come ahead if you spent more time shopping than trading right now in the market. Very possible on that. Tonight we'll spend just about an hour. We're going to look at a few things. What I want to do is we'll look at this here. I'm going to move it out of the way for a moment, but then we'll get back to that because I think it's something we need to take a look at. Let's bring up the SPY here real quick. And today, you know, at one point today, man, you would have thought that the bulls were just going to wallop the bears. At one time today, that candle looked like that right there. And there are a couple of things. I think if we never realized it before, and if we just today realized it, we probably need to hold it overnight and took it off today. Very quick trading right now if you're looking at those long trades, unless you're looking at some inverse trades. I want to go back to the SPY for a moment, and I want to go to a weekly chart really quick. And I want to, you know, we have to step back and really take a little bit of a view of the market. And I think this is important. And this is not the weekly. Here's the weekly. There we go. Here's the weekly chart. When we're trading, you know, it's important to keep a perspective of what's going on. And looking at the weekly chart, that is one strong bull. That is a very, very, very strong bull right now. This chart has not turned into a bearish chart. We're having a little bit of a correction, but nothing yet that you know, we should get out our hard hats or our steel-toe boots. We just haven't had that yet. Can we expect a little more downside? Yeah, I think we can. I certainly do. We might even possibly see a little bounce up before it moves down, but I do think we see a little more downside. But until this weekly chart really starts cracking, and cracking would be around this area here, that's where we might have a problem. So, you know, please do keep in mind that overall, everything is still bullish. We're just fighting a little bit of a correction right now. Take a look at the Qs. Man, that's a very bullish chart, just simply having a little correction right now. Diamonds the same way, I think. Yeah, look at the diamonds. Same bullish chart, a little bit of corrections. Now, of course, I saved this one for last for a reason, because it's disturbing. This chart is disturbing. We now have a close below the big three, the 20, the 34 EMA, and the 50 simple. So we're moving past that, and that is something that we really need to pay attention to. You can see that top starting to roll here, and if it just continues down, it's possible the small caps draw the entire market south. It is possible. Or maybe they're just the leaders. They're all going south, and they're all going to dump below the 50. It's just the small caps are leading. You know, the jury's still out on that. We'll wait and see. But I don't think I would go into right now that the sky is falling. I really wouldn't until we start seeing that chart pattern down there that really proves we're really starting to change that trend. And if price starts pulling below the 50, what we would be worried about is that it continues down, and then the moving averages start to follow. That's that's where we have a problem. But price will lead much faster than say the 20 or the 34 EMA. So we just have to watch that, and that's where we would get a little concerned right in that area. But please note that so far the market is still bullish, still looking good. Okay, I had this up, and I want to show you this. It's not too often I talk about oversold, overbought. I really try to steer away from that. One reason is why is I don't look at oversold with an indicator like stochastics and RSI or any other indicator you can come up with. I don't personally feel they give a good indication of what oversold or overbought is. It's just hard to read them. And I'm not saying that this is any better what I'm about to show you here. But for me it makes sense, so I just thought I would share this a little bit. First thing I want to do is I want to start on this left side over here and just get some of these dots out of the way. This first column here are charts. By the way, there's 23 ETFs on this chart, on this list here. And this is the close greater than the weekly 50 simple moving average. And you can see that there are 13 out of 23 stocks that's of ETFs that I have listed here that's closing that at the close of today are over the 50-day I'm sorry, the weekly 50 period moving average. And if you come over here, then there are 10 that have closed below. So right now we still have the weight is still closing above the 50-day simple moving average for these ETFs. And this is not overly important. This is not really what I wanted to talk about, but I figured it's all up here, so I might as well show it to you. Let's jump over here now, and I'm going to bring up everything that closed green today. This column here is price oversold versus the 20-day simple moving average. And I'm gonna click on this just to make sure they're all up here, which I knew they were, but I just wanted to show you. So we have 3 ETFs that are 10% away from the 20-day simple moving average. And I can't say there's anything magic about 10%. You could certainly put more in there. 10% below the 20-day simple moving average is what I'm looking at. Yeah, 10%. You could certainly make it larger. You could make it smaller, or not quite as large. The idea is just to find out how many stocks have pulled away from a common average. We look at the T-line all the time when price has maybe run up too far above the T-line, and then it tends to come back a little bit. The T-line might come up a little bit and they might have a meeting, but if it gets too far away from the T-line, it tends to come back. Just like if it gets too far below, it tends to come back. You get that snapback, whether it's a snapback bearish move or snapback bullish move up. So this is one thing I look at, and here's price where it's 10% oversold. Yeah, 10% oversold compared to the 50-day simple moving average. There's actually four. Excuse me. There they are. 4. XLE, USO, XES, XOP. I mean, all that oil really. We've had such a big drop in oil. Then you can see how these are starting to play in here. Now some of these ETFs, they'll never get 10% away, just because they don't have that kind of volatility. I generally don't look at stocks that don't have good volatility, but this is a list. Every now and then I look at it. I kind of look at what's going on here, and but so many in here I don't trade. I never would trade probably. I added one. I had no idea. Thank you to Mr. Peter Warden, GDOW, which it's just there. I added that today. I had no idea that was out there. So I added that to the list. But if this is interesting, there's 23 stocks here close less than the T line. Every single one of them, by the way. What I was going to do tonight was go through, after the market closed, I usually take some time off and then I start gathering my thoughts about what are we going to talk about tonight. And I thought, you know what, I think we'll look at some ETFs. We'll look at how they rank against the T line. Are they up or down? And I went and brought this list back up, and I kept, I'm sitting here, and the first thing I do is I always rank things, everything that closed the best for the day. So I'm sitting here just going through each one of them. What's going on here? And then I just, wait a minute here. We have a red dot on every single one. 23 ETFs are below the T line, close below the T line today. Now these are just 23 I follow. There certainly is more out there, but it's just 23 I follow. No inverse in here. Just ETFs in there. But every single one, I can come up here and click on this column, close above the T line, and there's not one single ETF that I follow here that's closed above the T line. I found that kind of interesting today, kind of shocking actually. I didn't realize that, and so I wanted to just point this out a little bit, and then also kind of focus on this oversold with two different moving averages. And you can do this with any moving average you want. But when a stock gets to the point of being, we'll just look at XOP. It was the big winner today. And we better put this back on the daily. There we go. When a stock gets pulled away from a major moving average, the 20, the 50, the 200, those are the three that I would call major moving averages that everybody in the world tends to follow. And if you go through just about any chart you want to look at, anytime price gets too far away, it comes back up to it, to those moving averages. And here we are with these oils. They're getting to the point now where we can start to see that little bit of a bounce. Now I want to stop right there for a second, okay? If you are going to trade some of these oil stocks, you've got to be so very careful. Here's what I don't think you'd be doing. You're not catching any kind of a bottom. This chart is in a downtrend. The oils are in a downtrend. The best you can hope for is a double dead cat bounce. Now I don't mean that in a good way. I mean that cat is dead. So if you're going to play these, you're playing strictly a short-term oversold bounce. Get in, get out. Don't play around with it. Don't hold out for more. Be extremely careful if you're going to play some of these. And I'm not. That's what tonight's not about. That what tonight's about is maybe looking for these pockets of stocks that get themselves oversold, and the charts aren't that bad, oversold to their major moving average like the 20 or 50. So say you were to come up here and we want to see stocks that close above the 50-day simple moving average on the weekly chart. So there's I keep saying stocks, but we know they're ETFs, okay? So here's a list here. It looks like there's, 13. So I've got 13 that's still above the 50-day simple, the 50-period moving average on the weekly chart. If I was to start seeing see orange dots up here next to the green dots, then I might start looking at that pocket, that area, for that's where we move down to candlestick signals. We want to look at, well, what charts maybe in XLI, for instance, are showing the best bullish signs, best based on a daily chart with bullish reversal signals, or reversal patterns. That's how I would do this. And unless I see any dots in this area, I'm going to be pretty much, we need to hold off till we see some true trading in there. And for instance, I'm going to bring up the weekly under. There we are, under the 50. So let's forget the energies. We know what they're doing. But take a look at KER banking. Here's the weekly. That's not the best chart we've ever seen, believe me. That starts cracking a little bit more, and we're going to come down and retest these lows. The 20-day simple period moving average is already below the 50. The 34 EMA is already below the 50. So this is not acting too good here. We really need to see some reversal before we can see any kind of bullish move in there. That GDOW, I mean, look at that. That has got bearish H written all over it. I mean, that is a prime chart pattern that we look at to be bearish. IWM is heading that way. The 20 is below the 50 already. Price closed below both of those. So we really, it's so important to get that confirmation in there. And that's what I'm trying to get to tonight mostly, I think, is just be very, very careful in your trading. And take a week off. Take a week off. Here's VT. VT is just the total world ETF. We looked at that today. And look at that chart. That's not looking too pretty. XLB. So these charts, not only do they need to scoot up a little bit before we can be bullish, we need to see some bullish candlestick signals and confirmation there. And I'm not trying to paint some bleak picture looking at this. I'm just trying to point these charts out that even though they have that oversold marker here, the overall chart needs to look a little bit better. Otherwise, you could get caught in that trap like today, where the market went up, you started buying frantically, just couldn't help it because everything looked bullish, and then the bears just came in and just bit your legs right out from under you. And that's where, if this is green, so we would need them over here, then we start seeing these orange dots in here. Then that's when we start looking at maybe buying. ITB, we'll finish it up here. ITB just poked below the 50 today a little bit, and the 20 is already below. So that trend is already down. We just had price moving up, trying to get out, but it couldn't pull that trend back up. So I hope that made a little sense. Certainly answer any questions anyone has with that. Anyway, I just wanted to show this. This is something I've had for quite some time, and it just sort of sits around, and sometimes I forget about it and I have to go bring it out, ETFs to watch. I was pretty shocked today when I saw this, and every single one of them were below the T-line. So the more they get oversold, the more dots we start seeing orange here, what will happen is the more chances we have of a snapback coming. We just have to make sure we're in the right area of stocks, and we watch where The snapback will only be up to resistance more than likely. So that's the only thing we'd be playing is from those lows up to resistance. I mean, the last thing I would think about is say USO, for example, going from here back up to $36. I could not, I can't even imagine that happening without the normal bottoming foundation, the normal movement of a chart down here. So I think the best we can hope for is a little bit of an oversold snap back up and then probably back down, at least back to test these lows, at the very least. So anyway, we'll keep an eye on that. I'll keep you posted on what I see here, what's working, and maybe it'll be helpful to some. I think that would be important. If you could make sense of that. One of the things that's important here, and I mentioned this right away this evening, was if you have a plan, a set of rules to tell you when did this chart turn bearish, swing trade bearish, and when did this chart turn swing trade bullish down here. If you have some plan just to tell you that, you're probably way ahead of a lot of other people. Now you just need to concentrate on paying attention to that and using that tool. Like I said, me personally, I use the T-line. I just simply follow this chart right here. What's that chart doing, and how's price acting with the T-line, the 8 EMA, and what is the 2 EMA doing in relationship to the T-line. And you can see this swing trade trend is down right now, and for us to be bullish we would have to change that, which means if we come back over here, if you want to see a perfect picture of it, that's what it looks like right there. Give up all of this down here. There is just no point in fighting this because you don't know if it's going to be real or not. Here's my point right there. It's not real. There's your doji, your gap up. It's not real. You've just, and here's another thing too, is just because we close over the T-line like this, there's no guarantee that that's real. No guarantee at all. But I think what it does, it establishes a very short-term trend starting out, the 2 above the T-line. Mura's asking, what's the benefit of using a 2 EMA instead of 3? I don't think a doggone thing. I really don't. Personal preference is all it is. Yeah, that's what I would say, Mura. I don't think a doggone thing. Just personal preference. Okay, so with that, let's spend about, wow, man, time flies. Sorry, I get to yakking too much. Let's spend the next 30 minutes. If you guys have any charts you want to look at, we'll take a peek at them, see what they're doing. If anyone has any words of wisdom in this market, please share them. I think everybody would like to hear that, little words of wisdom or any helps or tips they can get. And okay, so if anyone has any stocks, we'll take a look at them. Yeah. Stalker there said, good question to Murrah there. And that really was a good question. What makes, and I'm going to kind of go off on that. If anyone has anything they want to ask, please type it in there. I want to go off a little bit on what makes the T-line better than the 10-day simple moving average maybe. Not really a whole bunch of anything other than consistency. And the consistency is your consistency to use it. And it could be any indicator. It could be stochastics. If you use it consistently, then I think it's worth using it. So, like Murrah, what's the difference between the 2 and the 3? Not a great deal. The key is use one or the other and use it all the time. And that's the key. Um, it's when you start bouncing around, then you start fitting the chart to your emotions when that happens. Today I'm going to do this because this is telling me this particular indicator is telling me what my emotions want to hear. And then the next day or next week you change indicators. Well, this indicator, and you're not really saying that to yourself. You're not saying, well, I'm going to use this one because it fits my current emotion. But that's what you're doing if you run out there and chase different ones. Your emotions are leading you down a very dangerous path. Stalker says she uses the 3 EMA to exit as soon as I see a shooting star followed by a lower price, and if I'm close to my day trade target, exit. I'll tell you. Stalker posts her trades out here, and she's proven to me she's one heck of a day trader. There's no doubt about it. And she has a plan. You can see that right there. She has a plan. So way cool. Thank you. Doug, the indicator is not near as important as how you interpret the data and price action. That's right. That's absolutely right. That's why I can't. That's why I don't use stochastics. Is I don't know how to interpret the data. I used to think I did, but I realized that I don't know how to interpret it because I don't know how to make sense of, say, if it's oversold, price goes up, price goes down, price goes up all over the place, and the same with it overbought. There's just no consistency with it. So I don't know how to make sense of the data, so that's why I don't use it. But Jim there says MACD is much more informative than stochastics, and I can say that Jim uses MACD, and he's emailed me some charts, and he's proved it to me. The way he uses his MACD, that they tell a story, and they give you information there. So Jim, thank you, and thanks for the charts you've sent me. Alrighty, let's see, Linda. I can't tell you how much your patience, my patient has helped me. Waiting for the setup, i.e., price coming back to the T line before, excuse me, for buying a put. You're very welcome. I'm glad. Man, you've made my day. Thank you. Very kind of you. Murrah, SDS. SDS to me is a buy right now. And, this is where I have to say this. I have to say put a piece of tape over the ticker symbol, because sometimes stocks like this, people are reluctant to trade this chart because you're going against the market. I've had people tell me it's un-American to short the market, which I think is just absolutely an insane statement. I've had other people tell me that reasons why they don't short, which is absolutely crazy. I really have, Doug. I've had somebody tell me that once. And sometimes it's our own selves that there you go. Sometimes it's our own selves that thinks we can't can't short the market, and that's what this chart is doing. You're shorting the market with this chart. And what happens is we are wired. We are absolutely wired. There we go. We're absolutely wired for the market to go up. I mean, just look at the market over all the years. Look how the market has gone up. That's how we're wired, and so we always want the market to go higher and higher and higher, so we can't believe, well, the market can actually pull back. Even though the pullback may be short term, sometimes our own emotions gets in the way. So that's where I say put a piece of tape over that ticker symbol. Just simply look at the chart and trade the chart. Right now, this has moved back up over that 50-day moving average. It has moved over the 20, the 34, and the 50. That makes that a bullish move. Now, I drew a line from this high, and I first drew it right to that low right here, and that was the obvious place to me. And then after kind of looking in between here, I saw this right here. Now, is that the place to draw the line? It might not be, but it looks to me like it's talking to me here. That looks like it's talking to me right there. Look at that. There's a lot of chatter going on right here from here down. So what I'm kind of looking at is for this chart to run up to maybe around this area, maybe a little past, and then maybe we start to see a little bit of consolidation. Now, let's look at some logic here. Forget drawing lines. Let's just look at some logic. It's up 1, 2, 3, 4 bars. I skipped over this bar right here. Actually, I could count it because it's a gap. So it's up 5 bars. If it's up 6, maybe 7 bars, it's probably due for a correction. So let's just use the it's up a little too far logic, and it's probably due a correction. Look how far away it is from the T line. That's about, slow down mouse. There we go. We've got about 4.2% from the 20-day, about 6.3%. And for this particular stock, that's probably getting a little oversold to those moving averages right there. So if it makes it up to this area, I would not be surprised if it doesn't pull back and correct a little bit. That does not break the stock. Does not break it at all, because what do we know about bullish charts? We know they do this right here. So right now at this point, this is a very bullish chart. I would expect some sort of a correction over the next day or two, pulling back a little bit. And based on the close today, I see it going up to that line right there. I would watch it up into that line and then be very careful in that area right there. Well, let's see. Sorry, I totally lost my place. Let's see. It's also, Gigi's pointing out, it's hangman candle. Stochastics is overbought, so you want to watch that. So that might be an indicator somebody's looking at. Hangman, definitely. Stochastics, I don't even have stochastics, so I don't know what they exactly look like, but overbought is overbought. But I just simply look how much it's been up, that common sense, likely to see a pullback. But I do see it heading maybe up to this area right here. All right, thanks, Mura. Anyone else have something they want to look at? You are welcome. You're very welcome. AT. All right. AT, rounded bottom breakout. Thank you. I love rounded bottom breakouts. Doesn't matter what the market is. I think they're good. AT looks like it's continuing to move up. If I was going to look at targets for AT, I think I'd have to draw a line right there, and then I think right in here would be an obvious place. Right in there. There we go. So those are some targets right there. You get through those, and you're pretty much going to get the 50, the 200 up here. We've moved back. Moving averages. Look how the moving averages got a little bit crazy. See how spread out they got. See how spread out the T line got to the 50 here. And now look what's happening. It started moving sideways. As it moves sideways, the 50 continued down. That's what price will do. Now we start getting these moving averages starting to come together very, very, very tight. When moving averages come together very, very, very tight, something is about to happen. I can't tell you that it's going to be bullish. I can't really tell you with 100% anyway. I can't tell you that it's going to be bearish. I can't do that. Neither can anyone else. So that's what we look at some candlestick signals for that might give us some clues. So what do we see as a clue? I would have to say, let's see here. I see a clue right there, followed by another clue, and then another clue I see is this. From this high, from this bullish candlestick here, look how all this pullback right in here, this noise, stayed inside that candlestick. Remember, I tell everybody all the time, my favorite way to buy is on an inside day. That's nothing more than an inside day, and that is a very bullish sign when price can move sideways, can come back, up, back, make all this dance down in here, and still hold above that candle inside. Then it starts moving up. We got our moving averages changing directions. The T line, the 20, the 34, the 50, they're all pointing down. They're all stacked in a bearish motion to the downside. They start flattening out, and now look how they start coming up right here. Just an absolute trend change working. I would look at these areas for targets right in here, and I wouldn't be afraid to take those profits. Thanks, Andy. Nice chart. Let's see. I've got to go look at Gigi's chart. There we go. Gigi's got a he's got tomorrow's news in today's chart. Nice. And I certainly can't argue with that necessarily. We're getting down to this level here where we could see a little bit of an oversold bounce. The key is, what will the bulls do with that? That's the key. That's the key. Let's see, WBMD, too soon? Let's see. By my standards, yes, Ron, it is. Is it worth putting on a watch list? Yes, I think it is. I think anything oversold like this, if you're into this type of oversold move, I think is worth a watch list. But is it too soon? Yes. You see this gap right here? In fact, let's do this. Try to get that. I want that gap right there. Okay. See that gap down? See that high volume on that gap? And then we're down, and now we're putting in an inverted hammer. Now, an inverted hammer at the bottom is a bullish sign. That is a bullish sign. And when I say bullish, believe me, I'm only looking at a short-term relief rally in these oils right now. And so we have a bullish signal here, but what we don't have is that pattern in there. So I drew this line here on this gap down on this high volume because that just might be a little bit of capitulation. In other words, all the bulls that are in it. They're waiting. Please, oil, go back up. Please stop going down. They finally threw the towel in. That was it. They're done. To heck with oil. I'm done with it. I'm finished. It's killing me. So they finally get out. When that happens, that's when smart money comes in, and that's what might be happening right now. But I would not think that oil is going to go back up here. Not just yet. I would trade it. Trade into some resistance. Take your money. So you're buying the valley, sell the peak, let it pull back, buy the valley, sell the peak, things like that. So is it too early? I think yes. I think yes. Where would I buy it? Maybe over that area right there. I would have to see what I certainly can't predict what kind of candlesticks would happen in here, but from experience, this tells me that over this level is about where I would want to buy it. So I would give up all this fight in here, trade from here up, and let's see. Right now, I would come over here and do something like right in there. So that would be the trade to me right there. That would be one trade. Let's watch what it does at this level, and then there may be another trade up like this, but we need to watch what it does at this level. Very important, because here's what could happen. We do all the dance in here, and then it breaks out. And I'm going to make the breakout over here so I have more room. So it breaks out and runs up 1, 2, 3 days maybe. It pulls back, because that's what charts do. It pulls back. So you're buying the valley from the breakout, selling the peak, come back, buy the valley again, watch it break out that second time, and maybe it makes a run for up here without too much pullback in there. So that would be my plan on that chart. And that would be my plan with all the oils right now, pretty much. Let's see, Stalker, what is the average length of time in an RBB to make dollars? There's some that I've held for a long time as they move sideways, and there's some that pop up right away that they make enough money maybe in one day where I want to take that trade off the table. Let's see, as I'm talking here, let me go find an RBB. Let's not find that one. Okay, let's find that one. So, here we are in an RB. I might look at that, and as long as it stays above that level right there, close to that level, then if it hung around in this area, I'd stay with it for as long as it took to make money on it. Now, if it started coming back, then I would get out of it, whether it was here or maybe back here. But as long as it stayed in that area, I would stay with it. And there's no real time. Like I say, I've seen some work right away, tomorrow maybe. Man, just wham, there it goes. Or, they come up and they come back and up and kind of dance around until they get up into that area there. So I wish I could give a time, but I can't. There's just not one. Not that I know of anyway. I've tried that. I've tried to find all kinds of extra little things for the RBB and can't find much more than what I've already found. FP Charles, let's see here. AFOP. AFOP, rounded bottom breakout. It's working out fine. It's still doing what it should be doing. I think there needs to be a little bit of concern and warranted. The market is not exactly cooperating. Remember, you're going to get the weight of the market on anything you're in, and I think I would be concerned at this level. But on the other hand, I wouldn't be concerned unless it started dropping, say, below that line right in there. And all I try to do is run up the T line a little bit, just extend it. Anything in this area I think is good to go. You don't want to see any sell signal in here, so you would not want something like this. You would not want it up and then back. That's what you would not want. But other than that, as long as it stayed in this area, I think it would be a fairly good trade. Just keep in mind the market may keep you down. Market's big. Market weighs a lot. Let's see, Charles is saying look at the 2. And yeah, I mean all I would do is repeat everything I just said. Exactly. Oh, see, Andy's got a couple more. UBNT. Nice chart, Andy. Nice day today. Nice day today. I think it would be important to see this candlestick confirm, and pretty much anything above today's low, today's open, I would call that a good chart. Anything below today's open, you don't want to be near it, because the fact is it's still in a downtrend. But this could be starting to kick something off, and today was a good day. So this is one of these cases where give me an inside day buy and I'll take it. I just want to put a stop in, and let's see if this doesn't carry up, fill in that gap a bit more, and maybe test these highs up into here. As I said to the stock Charles put out there, just remember, as good as they look today, the market can sit down on these stocks and just hold them down. So you want to watch that. Sometimes that sitting down on them might be more than you want to deal with. BGC, it's getting nice and tight, but I don't think you have any buy here, not yet. I would wait till it did something like this. And again, this, let's, we've talked about this before. Let's look and see what our profit potential is. And you have a very nice void right here. You do. It's, you might not see it because you see those candles. You think, oh, what void? I see candles down here. There's some heavy selling that just no resistance at all. It just fell. That means that the resistance is minimal coming up. You still have resistance, but it's minimal. So you have a void in here. So let's look and see what our potential is. And I'm going to take it from the breakout of this little top right here, okay? Because that's where I think it becomes a good buy. So let's move this up. Man, my mouse is slow. I'm running out of battery maybe. So to get into these lows right in here, we're looking at 40%. So based on that, I just would not want to fight for 3, 4, 5% down here. I'd rather pay up for it and work for that 40% right in there. Let's see, Doug, I think the key is waiting until the buy signal has printed, not I'm going to say predicted. I get what you're saying there. Ask yourself the question, what must the chart do to make it buyable? Don't trade it until you can prove it can perform. Absolutely. And I think that's a true statement every single day, every single trading day of the year. But I also think as traders and investors, we fudge a little bit, and I don't think that's ever going to be stopped, and I don't think it can ever be helped. But on markets like this, I think that statement needs to be stamped right in front of us, and let it prove it. Here's a question I get asked quite often. We'll just use this chart here. Here, that chart, it does this in one day. I get asked this question. I mean, if I had a quarter for every time I was asked this, I could do all right. I mean, it would be nice. Here's the question: am I too late? No. That is like being at the horse races and the gate is just now opening. The horses are just at their nose is just sticking out of the gate. That's all this is. There's all this potential right here, but there's so many people think that it's too late to trade this, and it's not too late. What we have to do is get out of our mind that we have to buy down here. No, we don't have to buy down there. You can buy above. You can buy anywhere inside this candle right here. This is just a clue. That's all this is. It's just a clue. It's not the answer. The answers are over here. That's just a clue. So thank you there, Doug. Let's see, SGY looking better. SGY. It is looking better. Once again, we're in this energy area, so What I want to do on this is, and I certainly plan to mess around with these because I see some potential, but you're going to have to trade them. You're really going to have to be careful. So what I want to do is only trade stocks that I see a good percentage move to where I think resistance is. So in this one here, I see a 36% move based on today's close. 36%. That's enough for me. I can handle that. I can handle buying that chart tomorrow, say in this area, and making sure it stays green and good and still giving me the warm and fuzzies, trade it up to these lows right here. I see that as a big possibility. Thank you for that chart. Let's see, TRI. Nice chart. Nice bullish chart. This is a trend reboot right in here. Look at that bullish W pattern. We're up. We got a big gap up and a fail here, and it moved down, and it just simply got too far ahead of itself, too fast. It has to pull back a little bit. Money starts flowing into it. That's the only way it can get back up there. That's what happened today. I want to take a look at the weekly chart. Weekly chart is looking good. I think what I would want to do is definitely use the T-line, weekly T-line, these lows right in here as a stop area. Very nice chart. Thank you. Okay. I want to, here's a trade that I did a few days ago in the oils. I want to share this, and we'll call it an evening. And I said today a couple of times, I regretted buying this because it caused me an immense amount of grief. It really did. Now I ended up getting out of it today with money and good folding money, but I bought it, and it's very volatile stock. So you really have to be careful of these volatile stocks, because this is what could happen right here. Is it starts moving back, and it doesn't look like a lot, but it is a good healthy percent on volatile stocks. So I was starting to really squirm. Oh man, I really need oil to give us some sort of a bounce here. Well, I added to it, and sure enough, it started to move up, and I was able to get out of it while I was green. Now, it did not close over the T-line. If it did, I probably would have kept it. But it did not. So I closed it out because it is still in a T-line downtrend. The bears are still in control. I can always buy it back, and if I buy it back, say 859, if I can get there up to that 50% retracement, that dotted line right there, and that's 50% retracement from the gap down, that's a 23% move. That's the trade I would be looking for, and I would be just happier than a pig in slop over that right there. That little bit of a move on that one. Let's see. There was another one. Bass. That's right, Bass. Bass that I was in, and I closed Bass out because it did not close over the T-line. And I was able to get out of this one green, but very small green, but still green. Notice, I mean, it looks great. A great bottom down there, good volume, but it did not meet my rule. And my rule is it has to close over the T-line. Now, WRES. This is another one I was in. I did keep this one because it closed over the T-line, because it showed me it can do it. Just a peek over the T-line and back. I hear some folks sometimes say, say you've got a stock that it's made some highs in here, and we have a resistance line here, and then all of a sudden the stock comes up and it puts in a high that breaks out, but at the end of the day it closes down. That is not a breakout, and I hear a lot of times in intraday that this happens, and I hear people talking breakout, 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 breakout. That's not a breakout until it closes above that area. Now, once it closes above that area, if it wants to pull back, that's okay. That is okay, long as it stays healthy to this candle. So it can pull back like this, and then that's what we're looking for. If it comes back down through that line, that's not a good sign. That's a sign that's a big old head fake right there, and you have to wonder what's going on if the bears can take out a candle like that. Well, the same logic is down here. If it just pokes its nose up and comes back, there is nothing about a breakout on that chart. I don't care if it did close up higher than the previous day. Nothing about that trend changed. Keep in mind that the T line is my defining trend line for a swing trade. Swing up, swing down. What is price doing in relationship to the T line? So this one I did keep because it closed above the T line. It's showing me that it's got what it takes to keep moving a little bit further. So we'll watch what it does. Now, as far as BASS or SA goes, I'll be right back in them tomorrow if they're over the T line, and then I might make a little note to myself. Okay, my rule is today on this chart, I'll buy it intraday, but at the end of the day, it must close over the T line, and that's exactly what I said with both BASS and SN, and I got out of them both with money, and they both look like good charts right now. They do. I mean, if you like that bottoming kind of thing, they're not too bad, but they did not close above that line that makes the difference for me. Hi T, I came in late, but I'm glad I caught. That's okay. It's being recorded, and it should work, so all good. Alrighty, with that, I'm going to close up here. Say goodnight to everybody. Thank you for being here. We'll see you tomorrow. Be careful in your trading, please, 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 please. Remember, this market is down right now, short-term down. Overall, the market is still quite bullish. I think it's still trending bullish, but we have a little correction going on, and for most traders, if you get in at the wrong time and you start seeing you're in a stock and it starts falling down, I'll just use 10% as a number. 10% makes all the difference of whether you're going to make money this month or not. And rather than risk it, it might be better just to sit aside for a while, sit on the sidelines, and let this market settle down for a little bit. Especially if you're predominantly a long trader, then yeah, definitely that you want to sit out for a little while. Alrighty, everybody have a great night. Thanks for being here. I truly, truly appreciate it. We'll see you all tomorrow morning bright and early. Thank you.